Morning gang, BA here with Blockchain Cartel. It is Saturday morning, December 4th, 2021. We're going to put out a very short video on the status of the crypto markets as a result of the down move last night in Bitcoin and all other altcoins that were part of that bloodbath last night. So in this video right here, I'm going to talk about the overall structure of the market from a long-term view, put some context around the down move, and then kind of give you my conclusion at the very end on where I think we stand with this. Before we get started, we are not financial advisors, cannot offer financial advice, and hey, this is only my opinion. All right, so let's go ahead and get to it. So the first thing you see up here is you see a monthly chart of Bitcoin from its inception to where we're at right now. The first thing I want to draw your attention to is this is a logarithmic scale. Trend line kisses price at the bottom in March 20. Typically when we do the swing out method and we've got a nice slant on the logarithmic chart, make that first contact, usually all other subsequent touches, and I say usually, those are good buy points, good places to enter a trade. So that's kind of where we stopped at right now, at that area. Not saying we can't go lower, and honestly, this is a logarithmic chart. The pixels on this right here can be very large, so we could absolutely go down and exceed this, but this is, in my opinion, from this chart, a good area if you were looking at adding two positions. Again, not investment advice. Okay, so that structure right there looks very appealing to me. No issues at all. Now the second thing you're going to see up here are these blue arrows. I've introduced these in another video, but let's talk about them again. The shorter arrows on the bottom here represent either the start Bitcoin to the high, the halving to the cycle high, the halving to the cycle high, and the same thing, the halving, and eerily it tagged the high right here as potential cycle high in this overall cycle. Now I'm not too alarmed about that. You might say, well, you just drew those arrows. No, these arrows are the same length. It has nailed these two here, same length. This one is extended. This is the same length as this one. My argument is I think these cycles are potentially going to be extended to the right as we move forward in time. So even though this nailed it to the T, it just shows you there is a cyclical dynamic in Bitcoin and the crypto markets that's pretty accurate. All right, these longer lines represent from the halving to the lows in the cycle. Halving to the low in the cycle. Okay, same thing here. This one implies that, if all things hold equal, that somewhere in November 22, you might want to have some cash available to start building and accumulating crypto for the next cyclical rally. But again, this is this overall structure so far is intact, nothing out of the ordinary. All right, let's go to the next chart here. Let's roll it over. Let's move this down to a weekly time frame. All right, so here you see the logarithmic scale. The logarithmic curve and the price of Bitcoin, as well as the stock to flow model. So again, my play as a trader is that I'm playing for this upper red boundary right here. Whatever happens before I get there happens. I am playing to take profits in this upper red zone. All the crashes, or all the tops I should say, in previous cycle tops occurred in this. I'll extend this out on the next video so you can see every single cycle top and where it peaked out, but it's in this area. So you can see here the stock to flow, this line here, the upper boundary of that stock to flow right there. So kissed it to a T. That's typically what you can expect. I'm not going to be greedy though. If I get up into this area right here, I'll start taking profits. That's my play right there. You can see over here on the right, it's just a veritable bloodbath right now in everything. There's nothing escaping this. All right, so anyway, you'll also notice that Bitcoin likes to play in this middle area right here on its way up to the top. So again, that's what I'm banking on, is that we're still color code's still intact. We're still in the middle, and potentially we could see higher prices. So, you know, I've run multiple portfolios in crypto with different objectives. One of those is the hodling portfolio. So for me, for us that are hodling this right here, I have no intentions of dumping my crypto holdings on down moves until I get up into this zone right here. So I'm playing for that zone, and there's not much gonna shake me out of those positions. Just so we're clear on that. Now my other trading portfolios, those are a little bit different, and yeah, we'll talk about those at another time. Okay, so overall structure here, still from a long-term perspective intact. If you're trading, this is not the video you want to be listening to, but for long-term holders in crypto, again, this is what we're looking at. All right, let's get rid of this. Let's go down to a daily time frame. All right, so what kind of a down move? Let's put this down move in context. All right, it just looks really, really ugly. I know it does. But, you know, a few videos back, I think I mentioned that I'm anticipating multiple 30% pullbacks prior to getting to the top, the zone I'm playing for. So let's just take a look and see what we've got so far. We'll go from high down to low, and you can see here that we're at about 38-39% pullback. Okay, for me, not surprising, not out of the question. Doesn't shake my belief or worry me in the least. Okay, so let's go back to a weekly, do some retracement level looks at this right here, and see how that looks. Okay, so yeah, here we go. All right, so this on the charge up to the 2017 high, there are multiple cases of this right here. Just have to blow it up. Again, this is weekly time frame here. So this charge here went all the way down to the it stopped at the 61% retracement level. Keep that in mind. Let's take a look at this right here. It actually did it in one bar. Let's see what that retracement looks like. I'll have to break that one down into daily time frame. Anyway, let's roll over here to currently where we're at. You know, we've had this little bounce right in this area, so so we stopped at the 61% retracement. We kind of probed it a little bit and rallied back above it. So, you know, not surprising. That's a good bounce point, good inflection point for all moves up. So we just took this most recent low had that ramp up right there, and the push higher. So a 50 to 61% retracement level is definitely in the cards. So far the context around the down move, 61% retracement level from these lows that it made back in June. Not out of context at all, still in context of a bull market. The fact that we are, let's see if we can see the volume here. Yeah, if you can see just kind of the sloping trend of that other than this one spike right here, the volume is completely diminishing on all this action here. So what that implies is that we're just in a potentially consolidation zone, slight distribution maybe, and I think my opinion is that we're coiling up for another big move. So I truly believe we're going to see $10,000 bars on lots of days moving forward. I certainly believe that some of those are going to be to the upside as well. So again, nothing out of context here for this. In fact, the volume, I would be very, very worried if we had nothing but higher red bars all the way through here that eclipse these back here. So that would be concerning to me, but so far nothing is jumping out. All right, let's take a look, go back down to the daily time frame and take a look at something else. All right, what I like here is the fact that we're down in the green zone, which implies a good place to buy. Now we had a probe right there, and you see we immediately had a rally up to this fractal high. Back here, immediately started rallying, consolidated, they couldn't drive it back down, and then market takes off. Okay, back here, we were in the zone, stayed there. When it popped out, rally ensued. This is all this is distance away from the volume weighted average price. That's all it is. And typically, again, when it gets in this green zone at the bottom, implies that you're either close to a bottom or you're definitely in an accumulation zone. Again, not investment advice, but it's kind of how I look at it. All right, so you can see here that certainly, was the area. So when I continue to get these lows, I start framing these bars kind of like I did here, and that puts me, once we get into this green zone, that marks out a range for me. And certainly inside that range is where I begin to accumulate, start adding positions, and start looking for those fractal breakouts back to highs again. We can go back again. Again, this is on daily time frame. We probe down in there. That would have been a nice buy. That was the low of that move at 9,600 and some change, and it just went zooming up after that. You can continue going back as far as you want to. Low area there. It scared you a little bit, and then just rocketed higher. Same thing. I don't think I need to go back any further. Okay, so compelling evidence that we may not be on the exact low, but we are definitely in an area where I like to operate, where I like to accumulate, and I feel very comfortable in these types of positions. So anyway, we're at 14 minutes in, a little bit longer than I wanted to cover, but hopefully it's put a little context around the move. We looked at the overall structure from a long-term point of view, fits well within a long-term bull market. The context around the down move is we pull back to a known Fibonacci retracement level. We are currently in what I consider an accumulation zone. I'm going to start marking off these highs and lows right here after the bar closes to create a range for me to operate in going forward, and then we'll just see how the market unfolds. I hope this video was helpful. Ask you to hit the like button, subscribe, and select that bell notification. This is BA signing off.